Hey there guys, thanks for tuning in to another video, and today we're going to do some Bitcoin historical data analysis. So around about 18 months ago, for those of you who may have been around then, I grabbed some data out of CoinMarketCap and I just started doing some analysis on how it performed over a year. And when I did that, I did it based on financial years. So we broke down and looked at things like what were the gains that were made during those financial years, both in terms of dollars and as a percentage ROI. And then we also looked at things like averages and medians, and even broke it down into a median per month, realized gain if you were to buy at a certain time and hold it through that period. So today what I've done is I've gone back and I've completely updated that spreadsheet up to the current date, and I've also added in some additional statistics to start looking at some different comparisons on how we actually measure this historical data and some different performance metrics we can actually do to look at it. And I think you'll find the results are actually pretty interesting. So stick around guys, thanks for tuning in, and let's get into the video. Now firstly, I just want to say thanks to Tommy G for actually suggesting this in the comments a couple of weeks ago. Tommy has been a follower of this channel for a long time, and Tommy saw that first video and suggested that I go back and update it and do another video on the spreadsheet. So thank you, Tommy, for that suggestion. I think it was a really good suggestion, and to be honest, it's been quite good to actually get back into the numbers. Guys, I should also mention that sorry I sound a little bit nasally today. I feel a little bit under the weather, so if I do come across a bit nasally, then sorry about that, but hopefully I should be better in a couple of days. So moving straight into the spreadsheet and what we kind of did back when I did this video. I should actually show that first. So this was a video I did many moons ago. This was back in August 2017. It's quite incredible going back and looking at old content, old videos. It's a combination of cringe. You kind of cringe at yourself, but you're also kind of proud as well that you've been around for this long, and you know, you've managed to keep creating content and have kind of stayed in the game, especially when my channel was so new. When I did this video, I think this was like my 7th or my 8th video I ever did, and you know, looking back at it now, it's just super weird. So the premise of this video actually was, could you live off 3 Bitcoins, and if so, how could you spend it? And what I wanted to do back then was to kind of show, if you actually bought some Bitcoin and wanted to use it as money, you have to use it at strategic times when it's either equivalent to the value that you bought it or it's going up. You don't want to spend it when it's going down, because you're losing money when compared to or relative to just keeping the money in fiat currencies, not to mention the time and energy expenditure used to acquire that Bitcoin in the first place. So what I wanted to do is look at Bitcoin and its historical performance to kind of see how it's performed over the years, and to show people, like, if you were to do this, this is what the past data says. Now, of course, the usual disclaimer, past performance is no indicator of future performance or no predictor, but it does give us a really good insight into how things have performed up until that point. So what I did is I grabbed data out of CoinMarketCap. Now, the CoinMarketCap historical price data for Bitcoin actually only went to 2013, so I had to get data off 99 Bitcoins, which goes all the way back to 2010. So in doing so, what I did was I looked at the return, both in terms of dollars and percentage, across financial years. So that being the 1st of July up until the 30th of June for each financial year, and the results were quite interesting. So if you have a look at this this screen here, from FY 10-11 up into 16-17, or year to date when I did this video, we had these strong years of gains with only 2 years being down, and those 2 years were around a negative 41 to negative 40%. And you can see some of these other years, I mean, if you just held through that poor financial year, not only would you regain your losses, but you would significantly increase it. When you look at 12-13, when we had 1,459%, and then 13-14 when we had 618%, and so on and so forth. So the average, what I then did was I averaged the gains across all these financial years to say, okay, look, the average gain from Bitcoin's essentially inception to date has been this figure here, 4,579%. But the median, which is a more conservative figure that you should probably be using when you're looking at these kind of numbers, was 310%. And that essentially cuts out the outliers. So that's cutting out this FY 10-11 figure, which is when Bitcoin, started off very, very cheap and then absolutely rocketed up within a couple of years. You kind of don't want those huge numbers in your calculations because that's going to skew the data, it's going to skew the results. And that's why it's more accurate to look at things like the median. So anyway, it's been, nearly 2 years since I did this spreadsheet. And I thought, well, it's time to update it, time to crunch some more numbers and get some charts going and see what else we can actually start doing with this. And this is what I've come up with. So what you'll see in front of you, just let me zoom in here a bit so you can, whoops, that's the wrong one, so you can see the screen a little bit better. So on the top here, we've got the gains from FY 10-11 up to year to date, okay? And this is financial years, so much like I did in this previous spreadsheet, this is the same. This is financial years at the top here. Now, what you'll see is I've actually added in 17-18, as that year has now passed, and I've done financial year to date. So this is from 1st of July 2018 up to the current date. Now, the gains have changed significantly, and that's because after I did this video, I realized there was a couple of figures that were actually wrong, and I corrected them, and I did another video showing that. But the premise, the premise was still the same. So when we look at the updated numbers, it's quite interesting actually. So obviously we had in 2017, we had the huge bull run, and then we had the bear market of 2018. However, if you were buying at the beginning of the financial year, during 16-17 and 17-18, you would have still realized a return, because remember, financial years are going from the middle of the year to the middle of the next year, the following year. So you're not exposed to those highly volatile periods which generally, but not always, happen over sort of the Christmas end of year period in the crypto markets. So FY 16-17 realized a return of 277.58%. So if you bought at the beginning of the financial year in 2016 and held to the end of the financial year, which was mid-2017, you would have realized a 277% gain. Not bad. And the same goes for 17-18. If you had bought mid-2017 and held all the way through the mid-2018, despite the huge bull run and then bear market, you would have still realized 149% return. Not bad. So it kind of goes to show you how not only when looking at these charts, the perspective matters, but also the timing, right? Also the timing and the metrics that we're actually looking at gains and losses at. So this looking at the mid-year as opposed to the calendar year is a completely different result. Now, financial year to date, so this is going from 1st July 2018 to today, which is the 10th of April 2019, there has been a loss of negative 18.9%, which is far less when you look at the previous financial years, and we still have a couple of months, we still have about 3 months left before the end of the year, so that loss may actually be recovered yet, but we can't say that for sure. So when we look at the new average gains per year, going back to all the way back to 11-12, we still have an average gain of 288.81%. Now, I should mention that you see over here, I have excluded 2010 and 2011 just because the data is too much of an outlier to include. I've just looked at it and thought, not only does it throw off the charts, but I just think it was too much of an edge case to include. So I've excluded that, as you can see here. So when we look at the median gains per year, the median gains are still 146.28%. So if you essentially what that's saying, if you buy in any one year, statistically speaking, the median based on previous performance has been 146%, and the median per month per year is 12.19%. Now, obviously, crypto is extremely volatile, and these pumps happen at, can happen completely randomly. But when just looking at things from a bigger picture, it's quite significant, the returns that are still yielding. Now, here's where it gets even more interesting. So what I decided to do is, after doing financial years, I thought, well, why don't I do calendar years, right? So taking the difference between the 31st of December of the year, taking the difference between that and the beginning of that year, so the 1st of January of that year, to see what the returns were over the calendar year, and then compare that to what the returns were over the financial years. Now, the scenario would be, well, if I bought at the start of the year, what would my returns be at the end of the year, as opposed to buying at the middle of the year or the start of the financial year? And the data is super interesting. So looking at it here, guys, down the bottom in this kind of this pretty yucky looking green color. So for 2011, the gains were 1,233%. Quite significant when you compare to financial year 11-12 that actually had a loss of negative 54%. 2012, 182.61% gain. 2013, 5,482% return. 2014 yielded a loss of negative 58.82%. 2015 was a gain of 32.91%. 2016, a gain of 123%. 2017, a gain of 1,238%. Quite interesting when you look at financial year 16-17 was a return of 277%, and then 17-18 was a return of 149%. So if you based your purchase on the calendar year in 2017, you would have far exceeded returns if you based it on the financial year. Now for 2018, this was the really significant loss. We saw a reduction of negative 72.6%. And then for 2019 year to date, we are up 38.78%. So really interesting, the calendar years do not correlate with the financial years. They're completely different. And if you were basing your purchases on the calendar year, you are more likely to get a return based on the data, because when you look at the financial years, there were 3 years of losses, but when you look at the calendar years, there's only been 2 years of losses. However, the loss in 2018 has been the most significant to date. So very, 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 very interesting stuff, guys. And when we look at the average gains per year for the calendar years, we've got a far more significant return of 911%. However, the median is actually lower than the financial year. The median is 123.03%, with a median per month per year of 10.25%. Now, to more easily interpret this data, I've put it into 2 graphs down here. So on the left, we've got Bitcoin gains financial years, which is merely just this data at the top here placed into a bar graph. And then we've got Bitcoin gains calendar years, which you can see the green lines up with the green in these cells just here. Now, interestingly, when we look at the financial years, actually, I'll go into that in a bit. So first of all, just explaining, you can see down here on the x-axis, you can see the financial years that correspond to the cells in row 3 up here. You can see that these are the negative years. I've also put the exact percentages there as well that are displayed. And the black line is a trend line that shows the returns are trending downwards over the years, right? So essentially, people that got in this is favoring people that got in very early. So the returns per financial year are essentially trending downwards. So you're generally not going to see, the huge, well, if you were to base your decisions on this data, generally what it's saying is you're not going to see as big returns. But anything can happen, right? And when we look at the calendar years, we can see much of the same thing. So we can also see with the trend line here, we can see that the returns are actually trending downwards over the years, over the financial years. So on the left here too, as you no doubt you would have worked out by now, on the y-axis you've got the percentage ROI. So very, very interesting stuff when you kind of look at it from this kind of perspective and you look at the data, and especially if you were trying to come up with you know, like a kind of strategy to determine when is the most optimal time to accumulate or to buy. So the data that we're seeing is essentially saying, if you were to look at probabilities, what is the probability that you're going to get a return? Well, the data is telling us that based on calendar years, you are more likely to get a return, given that there's 1 year less that had a loss when compared to financial years. However, the median gains over financial years are slightly higher, not high enough that I would say that you would take the additional risk, again, just based on this previous data, but interesting nonetheless. So one thing I want to do from here, now that we've kind of got this base data set, is I want to start really adding to this over time and start doing some comparisons to things like the S&P, the NASDAQ, the Dow Jones, commodities markets, securities, derivatives, and start comparing the performance of Bitcoin against traditional assets. Now, no doubt that data is probably out there already. You could probably find it quite easily if you want to, but I think this is like a good project to do on the channel to share with you guys as we move forward and build on this spreadsheet and kind of walk you through the process as we go along. Now, if you guys are interested in checking this out yourself, there's a link down in the description. I'll make this publicly available. So if you want to go and vet the data, if you're going to check it out, you're more than welcome to do so. It will be in view only. So if you do want to modify it, you'll have to make a copy to your own drive, or you'll have to download it and then convert it into an Excel spreadsheet. So there's probably some minor things you have to do in that regard. You'll see up here just some notes about where the data came from if you want to go and actually find where the sources was. And yeah, guys, that's pretty much it. And I'm going to tidy this up over time too, because it's pretty messy and I'm a bit OCD, so I really need to tidy up the spreadsheet. I just haven't got the time to do that right now. So guys, that is it for the video. I hope you enjoyed. Again, Tommy, thank you for the suggestion. If you guys did like it, likes are really appreciated. If you're not subscribed, make sure to subscribe. Leave a comment, tell me what you thought. And also thank you to everyone who watched my last video where I did reading and responding to comments. The feedback was amazing. I'm so stoked about how good the feedback was, and I can't wait to do that again because I enjoyed that format and it seems like you guys did too. So leave a comment down below, ask any questions, and next time I do a reading and responding to comments video, I might actually read out your comment and respond to it in a video. So guys, that's it for this one. Thanks again for watching. Have a great rest of the week, and I'll catch you in the next one. Cheers.